Good morning, and thanks so much for joining us today here on Aspire to Retire with Ralph and Tim Short, the financial advisors and the father-son team behind Welcome Home Financial Partners. You can find out more about them online, the website welcomehomefp.com. You can also set up a time to speak with them, or you can give a call. Do the same thing. Give a call, complimentary conversation. Come into the office. 3 offices are here in the Richmond location area. The number is 804-635-3550. Once again, 804-635-3550. My name is Chris Vaughn, and I'm pleased to be joined, as I am every show, with Ralph and Tim. Gentlemen, it's good to see you once again. How are you today?
Doing pretty good, sir. How about you? We're just trying to navigate this pollen.
Yeah, that's I washed my car the other day, and I don't know why I did that because it's a gray car, or it's kind of a greenish, yellowish tint right now. But it is one of those things. I know pollen season. I stock up. I double on the allergy medications. That's how I prepare. Same sort of thing when it comes to the market. We know there's going to be volatility, and, well, we should prepare for that. We're going to get into that in just a second. But first, appreciate you guys taking time out of your schedule to spend with the listeners. But let's go ahead and turn our eyes to the market. If somebody asked you how your retirement accounts are doing, people might focus on the losses and the volatility we've had so far this year. But let's take a step back for a second. 10 years ago, the Dow was at 17,600. Today, it's around 46,000, which is a 160% increase in 10 years. So if you point that out to your clients, does that calm them down, or is it a sign that maybe risk levels need to be reset?
Well, I think the important thing is focusing on what you're trying to do, what you're trying to accomplish, and where you're at, right? I think it's a great perspective because, there's been a lot going on. There's been a lot of volatility as of late, but recent history, things have gone fairly well. And I think people can become overconfident in what the market can provide, right? So, that whole ride it out strategy, maybe that's not the same philosophy, so to speak, as we need in our 50s or 60s or 70s, whereas when 20s, 30s, and 40s, things look a little bit different. So I think, you got to be leery of having too much confidence because recent history, things have gone well. That doesn't mean that it's going to continue in that manner. So I think it's important, once again, for everybody to focus on the future and not necessarily the past, because we can look at the last 10 years and be like, man, this is great. Let's keep this train going. But what if the train doesn't go in the same direction? So I think it is important, sometimes people can be overly too cautious though too, right? So it's really important to focus on your overall retirement income plan and where things are going to come from, because the strategies that you're going to use in retirement shouldn't be the same as they were before you were retired. So there's a lot to do with that, but you can potentially have zero risk and still participate in some of those gains. And once again, I think it's just depending on each individual situation. But what you don't want to do is just let the market continue to go down and still ride it out, because we don't know where this train's heading. Every day you wake up, it's a different headline, right? So I think it's, really important to focus in on what you're trying to accomplish.
And I would say this to you, Chris, understand that I can tell you back in 1987, the market Dow was below 1,000. So that's how long I've been involved in this up and down volatility. That's just a part of the package that you have to go with. Okay. And like Tim says, the closer you get to retirement or in retirement, if you do have a lot of knee-jerk reaction, it's probably a good indication that, you might be a little bit too much in the market, because if you can't sleep at night because of all the ups and downs, that's usually a telltale sign that, hey, let me take a look and see what I can get. Maybe not quite so volatile, but you need to have some in the market. Maybe you need to have some in protection mode. But it's always based on what you're trying to do. I mean, when we go through our roadmap, that's the number one thing that we do talk to people about is, if you're 30 or 40 years old, then I would recommend this. But if you're 60 to 75, then this is another way that you can take a look at. But it's always going to be based on your preference. But we need to have a conversation, and because greed can get in your way of having a safe retirement. Because yes, one of the questions that we always ask people is this, what do you anticipate that you will have as return on your investments in your retirement accounts? And I always tell them, I said, more is not the answer. It's always, you got to tell me what you anticipate or what you would like to have. You need to be reasonable, but I need a number. More is not it, but greed can get in your way. And, the number of people that have knee-jerk reactions, and it's a crisis. It's really not a crisis, just volatility is there. I mean, yes, you're going to have headlines like Tim was talking about. Every day we wake up with something new, and invigorating. Let's put it that way. And we don't know. We don't have any control over any of that. The only thing that you got control of is your reaction to the stupid headlines that we have to deal with on a daily basis. It's, a lot of times we hold hands, walk them off the edge of the wall, so they wouldn't do something too stupid. But there are times when people just do it before they even contact us. And usually it's a little bit too late when you do something and ask, what should I do now?
Yeah, and I think it's important because our role is to bring balance, right? So, a few ways that we help our clients is to reassess their risk based off how close they are to retirement. And that's important, but also to protect what they've built. A lot of people these days have done their own investing. They've done their own 401ks, TSPs, that type of thing. And, they don't necessarily know what they don't know. So I think it's important when you're, accumulating is you got to figure out how you protect that once you enter into retirement or getting close to retirement, but make sure that the portfolio itself matches their timeline based off of, where they want to be, what they're going to need, whether they want more or they want a number or they want a percentage, right? It's important to figure that out, but it's not just the market's past performance. And I think that's a big thing that people take a look at. And the last 10 years have been great, right? But there's been some hiccups along the way. So when do those hiccups come? How bad are they? And will those hiccups stop?
And I would say also to anybody out there, you can't time when the market's going to turn around. If we lost 20% today, you may gain 25% in about 2 weeks, or it may take you 2 years. You just don't know. So you need to understand it's a long-term goal of yours is to stay focused on what your goal is and to be patient and not have everything that you own in the stock market, in Bitcoin, in gold, whatever it is that you think you need to be in. Maybe you shouldn't have everything that you own in that. Let's have a balanced portfolio or just a balanced bucket strategy, whatever you want to call it. It's based on you and you alone. And everybody's different. I know, Chris, you're probably a little bit different than me because you don't remember when the Dow was below 1,000, right?
I was in grade school. We won't get into too much more of that. But, it is a valid point. It really depends on where you are in life. And with it being the spring season, amusement parks are opening up around the country and roller coasters. We've all heard Wall Street or the stock market equated to a roller coaster, the ups and the downs. When you're younger, those roller coasters are great. They're super exciting. Now, as I am older, a little bit older, my back physically does not tolerate those as well. The same sort of thing as you get older, the ups and downs of the market, you may not tolerate as much. So it really is about leveling that out. Find, maybe not a lazy river, but something that is a little calmer and consistent for your retirement so that you don't have to have those knee-jerk reactions. It's all part of designing a proper plan. And that is what the team at Welcome Home Financial Partners, that's what Ralph Short, Tim Short, the entire team do for their clients. But it all begins with a phone call, setting up a time to speak with them, complimentary, welcomehomefp.com. Well, that's the website, but the phone number to make that call, 804-635-3550. Again, 804-635-3550. It's not just amusement parks that are opening up, baseball parks across the nation. Major League Baseball is back. And, guys, it's interesting that America's pastime is very similar to a strategy that can help improve your retirement. Here is national best-selling retirement author Patrick Kelly.
I think people feel like they need to hit home runs or grand slams to win this retirement game, and it's not true. All they need to do is hit singles and doubles over and over and over again, getting on base over and over and over again, and never taking a loss. I mean, think about it. We're using the baseball analogy a little further. If you could hit a single every single time and never strike out, you're going to win that game.
Now, the people who have the most home runs in Major League Baseball, your Barry Bonds, Sammy Sosa, they also have the most strikeouts. So I think that he equates, you're going to have these great plays and it's going to look phenomenal, but you're also going to have the ones that people don't really shine a light on. People at the water cooler, they talk about their great investments, but they never talk about the failures they've got. So if singles and doubles are the consistent key to winning the game, what does that look like in a retirement plan? Where do people usually try to swing for the fences when maybe they shouldn't?
Well, I think that analogy is spot on, and you're right. It's not necessarily the sexy way of doing it, but that's what people are trying to take a look at, is hitting that home run or that grand slam. And I'm thrilled that MLB is back, and I don't know if you've watched any games, but the new challenge system that they've got for balls and strikes is pretty cool. So we'll see how how that all shakes out. But, in retirement planning, singles and doubles means essentially that you stay disciplined. You want to make sure that you avoid those emotional decisions, but also focusing on the steady or repeatable outcomes. I think, once again, is that people have been accustomed to how great or not great things have gone, and they kind of rationalize their decisions based off of that. Well, there is, past performance is not indicative of the future. We just don't know what's going to happen in the future. But I think where people get in trouble is when they're trying to hit that home run or the grand slam, like one of my guys did to walk off a few nights ago. So that was pretty cool to watch and see. But I think, chasing those high returns, the biggest mistake, the biggest home run or grand slam people try to make is jumping in and out of the market, especially these days. And we've had these conversations with so many of our clients is, you don't want to see your account go down by 1 or 2% in a day. Now, it doesn't sound like a lot, when you say 1% or 2%, but that's one day out of 365. 10 years ago, you wouldn't see swings like this ever. Like, it's crazy. But also making big changes late in the game is where, you've got to be careful of that. You want to make sure that your retirement's going to outlive yourself, right? And I think it is, I ask this question to a lot of people is, what type of return are you looking for? And a lot of answer is, I don't care what the return looks like. As long as I can fund my lifestyle, I don't care. And I think that's important. That's kind of the mindset of hitting the singles and doubles. Doesn't necessarily matter how we get there, but hey, if we play small ball, we're going to continue to live our retirement years the way that we want.
But I think the only way that you're going to be able to live the lifestyle that you've always dreamed of is have an income plan. Where's your money coming from during your retirement years? A lot of people say, well, I got Social Security. Well, do you want to retire on Social Security? Probably not. I mean, there are some people that can do that because they had a pretty good job, but they also didn't have a lot of expenses. But how do you know whether or not that's going to be able to sustain what you're trying to do unless you do have a written income plan? Now, I'm not talking about, well, yeah, I think I got $5,000 coming in and I've got about $3,000 going out. But then when we actually do our roadmap process, it's not exactly that way. And they're like, well, where's all these numbers coming from? And I said, well, these are your numbers you gave me. They just have never had it down written format to see it in black and white so they can visualize what their retirement will really look like. And I would say a lot of people have to decide, do they want everything that they've got still left in their retirement plan, or do they want to start thinking about, okay, let me kind of diversify where I am right now to make it a little bit safer. I have access to my money when I need it without thinking about, oh, the market just dropped 20%. So if I take out, $2,000 this month, it's going to take, let's say instead of 2,000, it's going to take you 2,500 to get the same purchasing power. So those are all things that, we sit down and talk with people about. And the other thing where people make a mistake is they need to adjust where their risk tolerance is as they get more mature and in retirement years. And, a steady plan always beats a perfect market anytime because everybody likes that bull market and it's always going to be up. Oh yeah. I can tell you from 1987 to today, if everybody could go back and put their money in then to today, you wouldn't have a care in the world except one thing. When you took your money out of the market, Uncle Sam's going to be there with his hands out. So you've got to be prepared for that. So you can't control the market, but you can control your reaction to it. And that's where we come in as fiduciaries to help you do something that's not damaging to your financial health down the road.
Fiduciaries meaning acting in the client's best interest, telling you the things that you need to hear. Maybe not always the things that you want to hear, but presenting what they believe to be in your best interest and then letting you make that informed decision. There is no singles and doubles derby during the All-Star break. I know the season just started and we're a ways away, right? There's no singles and doubles derby. It is the home run derby because that is exciting. Yeah, the consistency may not necessarily be sexy, so to speak, but it does provide that stability. And as you get into retirement, that ROI needs to change from the return on investment to the reliability of income. Can the money that I have provide that income so that I can maintain that lifestyle that I want? If you got a properly structured plan, like what the team at Welcome Home Financial Partners puts it together for people, you very much can. 804-635-3550 is that phone number, or you can go to the website, welcomehomefp.com. Tim, I have to admit, when you talked about the new challenge system that's in play this year, I thought you were talking about the 999 challenge that's popping up in some of the ballparks. Have you heard about this?
No.
It's actually a sponsored thing where certain parks, I can't remember, I think there's like 7 or 8 of them, 9 innings, 9 beers, 9 hot dogs. You've got to do it in the span of the game. Now, as the game has gotten a little bit shorter, it seems like more of a challenge, but I guess you guys won't be doing that anytime soon. But that's where my mind went. So, yes, happy baseball season to everybody out there. Listen, you've saved your whole life and you finally hit $1 million. Or maybe your house is worth $1 million, or maybe your business. Congratulations. Are you a millionaire, though? Not really. You're what they call a paper millionaire. And then retirement hits. You sell the house or you sell the business, and for 1 year, the IRS turns that paper wealth into real income. And that is when you might get surprised by a one-time massive tax bill that you didn't account for, you didn't plan for. So the big question is, can you do anything ahead of time to perhaps soften that tax obligation?
Oh, absolutely. But that takes planning. And this is one of the biggest mistakes people make, is not paying attention to what taxes will look like in the long run, right? We just focus on the present time because, granted, we're not guaranteed tomorrow. But what is very important is figuring out how much you're going to be able to keep. What you don't want to do is just continue to save your money in pre-tax vehicles. And next thing you know, when you start taking money out, whether you want to or not, and there's still some people out there that don't realize with their IRAs, their 401ks or TSPs, they're going to hit an age where you're going to have to start taking money out. So, it's important to focus in on here and now what we can do. But when it comes down to like selling properties or businesses or those types of things, you've got to know how it works. What you don't want to do is say, hey, oh, great, now my house is worth $1 million. Let's go ahead and sell it. Well, now next thing you know, you're giving a big chunk of that back. So you really got to focus in on what you can do now to help you with taxes in the future. But also, once again, when it comes to capital gains and those types of things, there are certain strategies that you can use to defer or, lower what your tax ramifications are. So nobody likes talking taxes, period, the end. I mean, I'll tell you right now,
Sure.
not a whole lot of people that come in and just right out of the gate, hey, my name's John Smith, let's talk taxes, right? But it is very important to focus on that because it's in every American's life, right? Whether we want to say it or not, it's true. And, people, while they're working, they've got the taxes taken out of their paycheck. So it's kind of out of sight, out of mind. Obviously, we're coming up on the tax deadline now. And I know we were talking before the show about it, but, that's when people start thinking of taxes. But guess what? You need to make sure that you focus in on that throughout the years and not just focus on it when it's time to start taking distributions. A lot of times there's things that you can't do once you get to that finish line. So once again, it's about that proactive planning. It's not just about, oh, shoot, now I've got to take out $100,000 out of my account. What am I going to do?
And I would say this to most people, particularly business owners or people that own rental property. Why are you spending 30 years of your life building your business or accumulating rental properties, but only taking 30 minutes to try and figure out how to exit it without understanding the tax ramification of it? I mean, there are legal ways to avoid some of the taxation up front, but you're still going to have to pay taxes over the long haul. But if you can control when you pay those taxes and all of a sudden you've got more money to utilize over the years in your retirement, doesn't that make sense to at least explore those options that you got that nobody ever talks about? Most CPAs don't even talk to you about how do you defer your capital gains? How do you make the amount of money that you pay Uncle Sam less than what they are wanting for you? I mean, it's not about avoiding the taxation. It's about how to defer it and make it the minimum amount that you have to pay. Because, anybody can tell you, well, you sold it for this amount of money, and because of that, you owe this amount of taxes. That's not tax planning. That's just preparing your taxes to pay Uncle Sam. And he's that silent partner. He's the one that's creating all that wealth that's a killer to your wealth, not anything that will help you build your wealth, but he's just happy to collect when you do sell and exit either your business or your rental properties. Yes, if you're just a homeowner and you've got some deductions stuff you don't have to worry about, but guess what? There's other ways of doing this that might help you out. And if you're not a business owner, but if you have retirement accounts, you got to think about it too, because now you got to answer a question that we always ask people. Do you want to pay the taxes on your IRA, or do you want your kids to pay it? Because that's an important decision that somebody's going to have to make. And there's no right or wrong answer. It's what you want. There are some people that come in that do not want to have any of their money taken out of their retirement accounts because they want to pass it on to their kids. Oh, that's fine and dandy, but you don't have a choice on that. The government's going to tell you when you reach a certain age that you have to take this amount of money out. And there are people that come in here and say, hey, I want to leave zero to my kids, so I've got to start taking money out. So that's pretty easy to do. You just have to start taking money out and pay your taxes up front now. But that's your choice. That's not my choice. It's not Tim's choice. And Chris, it's not your choice.
Yeah, and I don't think that's a very good decision either, too, Dad. By the way, I don't think that's the proper strategy.
Taking all the money out and not leaving it to your kids.
It's all according to who the kid is, that's the way it is.
And I think that's, it's important because we help our clients with spreading out taxable events when possible, right? Mm-hmm. But also figuring out when to sell those assets. Because once again, once you sell your assets, your options are very limited. So I think the real opportunity is planning beforehand.
Before the show, we were joking, and yes, admittedly, I have been dragging my feet on taking care of my taxes for last year at this point.
I wasn't going to call you out.
No, it's fine. I'll go ahead and admit it, but I'm not alone. There are many people out there who do, but then they also, come April 16th, they don't think about it again until next year. Here's the thing. If you can deduct, dog food and things like that, if they're a dependent, but what are you doing for the taxes that you are going to have to pay over the next 10, 20, 30 years, especially in retirement when it is vastly different? If you're not thinking about it right now, well, I encourage you to pick up the phone and give a call and set up a time to speak with the team at Welcome Home Financial Partners. Start developing ways to, obviously, we're all going to have to pay taxes. That is something that is a necessity. It's death and taxes, right? This is what Benjamin Franklin said. But if you could find ways to minimize that, to not necessarily play and use the rules that Uncle Sam has put into play, but find ways to pay what you're required to, but not a penny more, I think it's certainly worth taking a look at, because I feel like we all probably think we can do a little bit better with our money than what the government is going to do with it. So if you haven't thought about your taxes and retirement yet, set up a time to speak with the team at Welcome Home Financial Partners. If you have thought about it, you just want a second set of eyes on it. Again, same number, 804-635-3550, or you can go to the website and set up a time there as well, welcomehomefp.com. There's a gentleman in Canada named William Rossi who interviews older people about life advice that they can share with younger generations. And he asked this 85-year-old woman about marriage.
I'm kind of like Henry VIII, but I've only had 3. Okay. My last husband also lost his wife. We have been together now for 10 years.
Wow.
Yeah, very lucky. We have this expression that we both have a lot of baggage. When we met when we were 72 years old. So you're going to have a lot of baggage. So you give each other a generous baggage allowance.
At all ages?
Of course, at all ages.
Now, you probably see this a lot with your clients. How challenging is it to bring 2 different retirement plans and all the baggage that may entail together?
Well, it can be challenging because you're not just merging finances, you're merging expectations. And I think, not everybody's always on the same page. Whether you fall in love or you don't fall in love is a complete different story, right? But I think each person brings different savings habits. Everybody's got a little bit of a different personality and different wants and different needs, but different comfort levels when it comes to risk. We see this a lot, right? There's a lot of people that will be super conservative and then their partner is ultra aggressive, and you've got to find the happy medium there, right? Different visions for retirement. Everybody's got different needs, different wants, different goals, right? We all have different hobbies. I think, that's very important to hash out. Now, there are some discussions that we have in our office that we don't necessarily need to get into so much because they start wanting our feedback when it comes to those instances or those pickles, if you will. And those are things we just don't want to get into, right? But once again, what we help folks with is aligning their goals, because you could have had one retirement plan and your new spouse has a different retirement plan, but you got to think of the blended family, right? Because then you're going to run into the estate issues, the beneficiaries, all of these things. So it is very important to be on the same page there. But, regardless of all of that, you're going to need income, right? So no matter what your lifestyle is going to look like, whether it changes before the spouse or after the spouse or whatever. So we've got to figure out how you coordinate that. But then also too, Social Security is going to come into play as well. And there's some strategies that ultimately could be dropped off or picked up because of that. So add the plan for the reality that eventually one spouse will manage everything too. And I know Dad will tell you the same thing, as there's a lot of people that we meet with where one partner takes care of everything and the other one has no idea what's going on. And great, it works for them. But once that CFO of the family, if you will, passes on, then what? So that's something that we bring to the table. And we've had meetings set up just for beneficiary introductions and those types of things, because we need to know, they need to know who to contact, right? If they have no idea what the plan looks like, and that spouse all of a sudden passes away, then what? So I think it's very important to sit down at the table and start comparing and contrasting, if you will, and start putting things together.
And I think one of the biggest mistakes that I see, and sometimes we cannot help it because this is what the clients want, is not having them plan as a couple. I mean, if one of them comes in and says, I don't want the other one to know it, I'm kind of like, well, what happens to you is going to really, either hinder or hurt the other client or the other person that's involved in here. But it's up to you. But I think that's the biggest mistake that I would say, that you need to understand that they may not know everything. You may not want them to know everything that you've got, but that's a personal decision. But guess what? Somebody's going to know what you've got sooner or later. And sometimes knowledge helps maybe the tension that might be involved in the house because the other person doesn't know what the other one's trying to do. Mm-hmm. And they have no clear income plan. They don't understand if one of them passes away, they might be in a higher tax bracket as a single widow or widower than they were as a two-person, two-income couple. Because guess what? Part of that income, particularly if you have a pension with no survivorship, that means that entire income stream goes away. Have you thought about that? What about Social Security? If both of you are getting Social Security, the person that's left behind is going to receive only one. Now, it's the higher of the two, but it's still only one. So, Chris, let me ask you a question. If both you and your wife had the same amount of income, $5,000 a month coming in from Social Security, mm-hmm. and you lost half of it, how would it make your retirement plan feel to you?
Certainly a little bit more strained, yeah.
Yeah. So those are all issues I think people need to understand when it comes to this kind of planning. It's not about have you saved enough. It's about planning for the future.
Again, it's about thinking big picture. We joke there is a degree of marriage counseling that sometimes happens in the offices at Welcome Home Financial Partners. Not the big knockdown, drag out things, but when it comes to the finances, obviously that is an important factor because, again, you guys want to make sure that you're aligned on that. Everyone's retirement plan is different. Hopefully you and your spouse, the plan aligns a little bit. And if there needs to be a conversation about, bridging that gap, finding the happy medium in there, that is where Ralph Short, Tim Short, the team at Welcome Home Financial Partners comes into play. So when you set up a time to speak with them, come into the offices, make sure you bring, both you and your spouse and start developing that plan together. That is complimentary, 804-635-3550, or go into the website and set up a time there as well at welcomehomefp.com. A lot of us learned this the hard way. Not everybody actually belongs in your inner circle. We recently had a chance to talk with country superstar Keith Urban, and he gave us this surprisingly simple filter for the people that he works with.
I've always had great people around me. I've been very, very blessed to have that. My dad gave me lots of advice when I was a kid. He said to me, if you can, always work with people who you'd have dinner with them, even when there's no work to discuss. And I guarantee you, no matter how many people I've been blessed to have work with me in my career, which is a lot of people, every single one of them I would have dinner with when there's no work to discuss. That's almost like a given. That's the kind of person I want to be around.
Now, I've got friends that I work with where I actually refuse to talk work with them when we do dinner. But, you guys as fiduciaries acting in the client's best interest, how do you help people feel comfortable that you're part of their team, not just somebody that's handing them a plan?
Well, that is a great way to put it, right? And I think people want to feel like they're on a team and not just handing them a plan and walking away. Mm-hmm. So one of our main focuses, some of our main focuses is the ongoing communication, education, and not just recommendations, but also being available when life changes happen. I think that's very important because you never know. Like I tell folks all the time, it's like your job to us is to let us know what's going on. We don't live in your house. We're not going to know when something changes. So at the end of the day, it's about relationships. And if someone doesn't feel comfortable or confident, the plan doesn't matter. And I think that's where a lot of people start realizing, hey, maybe it's time for a second opinion because I started with this advisor 5 years ago and I've only heard from them 3 times. They don't necessarily know what's going on. And I think that's important. And I do like the analogy of, of the dinner. So I think that's really good. But yeah, those are some things that we talk to folks about on a daily basis.
When we talk about retirement and the length of that, 10 years, 20 years, 30 years perhaps, the person that you're working with to help maintain that plan. That is a relationship, and it could be outside of your family, outside of your spouse, one of the longer relationships you're going to have. So it makes sense that you start off, from the jump, trusting them, making sure that you align. You don't want to get into a relationship with somebody that, you don't necessarily align with one way or another. So it is kind of, to go back to the relationship analogy, that first appointment with the team at Welcome Home Financial Partners, it's kind of like a first date. It's getting to know each other, getting to know, you guys getting to know the clients, them getting to know you, and seeing, yes, this is a relationship that I feel comfortable with going forward, and then being able to have that ongoing conversation. And then, sometimes you'll come in and maybe you'll talk baseball with them, and sometimes you'll talk, the markets, but also the highs and the lows. It is a relationship, and it begins with trust, and it begins with you can't have that trust if you don't, if someone's handing you a bill of sale as soon as you walk through the door. It's not what you get at Welcome Home Financial Partners. It is a complimentary conversation, and could be some invaluable time as it pertains to your retirement. But it all starts with that phone call, 804-635-3550. Once again, 804-635-3550. Or you can go to the website as well, set up a time there, and that is welcomehomefp.com. As always, we appreciate you joining us, spending part of the day here on Aspire to Retire with Ralph and Tim Short. Hope you have a great week ahead of you. Hope you stay safe out there. Gentlemen, appreciate the time as always. And as we wrap up, I do want to leave you with the final word.
Yeah, thank you, Chris, and we appreciate your time as well. But we've talked a lot about uncertainty and a whole lot of change going on, estate planning, Roth conversions. These things are very important and can be very important for your retirement plan. So, if anything you heard today kind of struck a nerve, if you will, give us a call. We'd love to see what kind of value we can provide for you. We bring you into the office and we can create your very own retirement roadmap. But pick up the phone, give us a call, visit the website, attend one of the first Friday events. We'd love the opportunity to meet with you. So we want to thank everybody for listening, and take care.
All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decision, nor is it intended to be a projection of current or future performance or indication or future results. Opinions expressed herein are solely those of Welcome Home Financial Partners and Welcome Home Wealth Advisors, LLC. The information contained in this material has been derived from sources believed to be reliable, but is not guaranteed as to accuracy and completeness, and does not purport to a complete analysis of the materials discussed. All information and ideas should be discussed in detail with your individual advisor prior to the implementation. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstance. Advisor services are offered by Welcome Home Wealth Advisors, LLC, a registered investment advisor in the state of Virginia. Being registered as an investment advisor does not imply a certain level of skill or training. Insurance products and services are offered through WPI Holding, Virginia Insurance License Number 138509, an affiliated company. The information contained herein should in no way be construed or interpreted as a solicitation to sell or offer to sell advisory services to any residents of any state other than the state of Virginia or where otherwise legally permitted. Welcome Home Wealth Advisors, LLC and Welcome Home Financial Partners are not affiliated with or endorsed by the Social Security Administration or any government agency.